Good evening. Dan here at StockMarketMentor.com on Valentine's Day, Tuesday, February 14th. And I'm just going to, this is a real quick one here. I've been getting so many emails and seeing so many posts in the forum about Zynga that I just kind of had to wade in here. You know the story on Zynga. I'm not going to go through it. Well, I am going to go through it real briefly. It's a Facebook thing. A lot of analysts yipping about the valuation, that the valuation's really steep and this and that and the other thing, all of which I'm sure is quite true. The stock's been moving up, though. A lot of anticipation at earnings. I know Jim Cramer has been saying, and he's certainly not the only guy at all, who's been saying this is a sell into earnings because the stock, he just thinks they're going to disappoint and all that. So they came out and announced earnings. I just know they beat the numbers. And that's all. This is a stock I really couldn't give a rip about the conference call. I got better things to do, like floss my teeth. I really don't care about that because for a lot of different reasons, one of which is my teeth need flossing. But what I care about is how the market reacts to all this, because this stock is such a new issue that's really the deal. Is how does the market feel about this? So you buy the stock into earnings, now you're down. As I write this, or as I speak into the microphone here, the stock's trading at $13.98, so we'll call it 14 bucks. So it's down 35 cents from the close, though it's up still overall because the stock, gapped up actually at the open at $13.75 here. So the stock's in this range. So what do we do? What are you going to do with this stock now? Are you just going to buy it? Just buy it? Or are you going to sell it? Are you going to short it? I think either one is really not particularly wise. And here's why. Here's what you really do. That's your resistance on the stock right now. Support, I don't know, it could be there, it could be there, it could actually be kind of clear down here. That's what I would look to the current trading box to be right here. So in my view, and this is it, like I said, it's a pretty simple video, it's a pretty simple concept. Only time you want to be buying this stock is when demand, or when supply is basically out, when all the sellers for this stock are done selling. Post earnings, after earnings, they're done. How do we know when that is? We look at the high, 14.55. Go ahead and set your price alert, say for 14.45. Set it for 14.35, which is where the stock closed. Set it somewhere close to here so that you can have a little time to react. Or if you want to, just set a limit order to only buy the stock at, say, 14. If the high was 14.55, say I only want to buy the stock at 14.60 or 14.57 or something like that. Just anything above this level here. Why? Because the only way this stock is going to hit is going to be bought then if it's above 14.55. The only way it's going to get there is because all of the post-earnings supply has been soaked up by demand, and there's still sufficient demand to push the stock even higher. So that would be my trade on Zynga, is just wait for the stock to get above the intraday high here. That would mean that it starts setting new highs, and then you can buy the stock, because I like to be long stocks that are going up. I'm just nutty that way. I don't like to be long stocks that are trading sideways unless they're in a tight squeeze. This is not yet, or that are going down. So there's your trade on Zynga. I hope that works out for you. And members, I've got a pretty interesting strategy session for you tonight, basically on how to buy stocks. I've got 6 or 7 of them that we're developing some real strategies for, so that you can make sure that you're knowing how to get into a stock at the right time rather than at the wrong time. So I'll see you over there.